Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about this morning's inflation report, 6 retirement charts you need to know, and all of the 2023 tax filing dates. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Inflation cooled in March and the futures are up this morning. Does this mean we are done with interest rate hikes?
Well, hey, good morning, everybody, and good morning, Allison. So, yes, we finally got the number we wanted from inflation, right? So, this is the headline this morning from CNBC. The futures are in the green. The market's about to open here in less than 10 minutes. So, inflation rose just 1% from March, 0.1% from March, and 5% from a year ago, which both beat expectations. You can hear these numbers all day long. A chart, means 1,000 words, right? So, this is the really what you need to kind of understand. So to cage yourself, this is pre-COVID over here in January 2020, all the way out to 3 years later. You've seen the dark blue line is the all item CPI. So that is what is really talked about normally. And then they have another reference in there too. But really, the one that gets all the headlines is the dark blue line here. So here's the beginning of January 2022 when things became really, is this going to be transitory or not? Was what the Fed was talking about this inflation in here, but it just continued up all the way through the middle of 2022. So right in this time frame were the 475 basis point rate hikes to battle inflation. And here's where we are today based off of March. So the question becomes, are the Fed rate hikes working? I think this chart says yes, and several other charts say yes. The issue is it didn't quite work as fast as we had thought or we had hoped, one of the two. But it is working. Really, when you look at this, so somewhere in here, and the trajectory of it obviously is down significantly. The question becomes, are we done with rate hikes? I would like to think we are. That's probably optimistic. Maybe one more, but we're done this quarter. And in this chart, as long as the April chart continues in this fashion, this is a fantastic sign for the overall market. So what's going to happen? Are we going to have a recession or not? That's kind of a different story. It's really the Fed has tied their rate hikes to inflation. Are we beating inflation? Yes. It's coming down. Things are normalizing. So really, that's everything we can hope for as far as the rate hikes, working, and hopefully it lessens the need for future rate hikes.
Next, retirement in the U.S. is changing as the average age grows older in the U.S. Can you walk us through some of these changes?
Well, I talk to people about retirement every day, and this is a Wall Street Journal article. Normally, I use CNBC stuff, but these are some charts that will hopefully make you feel a little bit better about where you are with retirement, but also understand the changing demographics that are out there, which is important. We are aging, and modern healthcare advances are, of course, helping this, but as we get older, the problems change. Social Security becomes more of a problem if everybody lives longer, those sorts of things. So I wanted to walk you through these 6 charts that the Wall Street Journal put out this morning, and I think they're kind of instructive. So by 2030, that sounds like some date that's like way out there. It's not. It's 7 years away, which is pretty close now. More than 1 in 5 Americans will be over age 65. So when you think, okay, caveman days, average life expectancy in their 30s, and then now all of a sudden, increasing that pretty much every year, and modern medicine's only going to kick it out even further. This is not a argument on to whether we should keep people alive as long as we can. It's just saying that we are living longer, right? So these are the projections, and the percent across it goes over 20% around 2030, and then gets up to 23 or 24% by 2060 or so. So really, when you look at all the algorithms and things that go into retirement and Social Security and pensions, and those are going to be affected by this, right? If that average age slides. And again, when I sit down with a person or a couple talking retirement, we do talk about average life expectancy. Well, if those move, then the assumptions change, right? So that's interesting to just know that we're living longer. Retirement savings. Here's your average household by account balance by age. So really, people get in their mind, it's like I have to have $1 million to retire. Well, it depends on your lifestyle. If you have a very simple lifestyle, you can get away with having far less, or really the other way around. If you have far less, then you have a more simple lifestyle in retirement out of necessity. If you've been fortunate enough to start early, stick with it, and up into where your retirement accounts are 7 figures and above, then you should be able to live comfortably. However, if you've had a high income type lifestyle, you may think that 2 or 3 million is not enough to retire. It really is very dependent on the individual and what you want your retirement to look like. But if you're telling yourself I only have $500,000 and I'm about to retire, you can get it done, because these are the averages out there. You'd still be above average in that case. All right, as far as some other Social Security, average benefits $1,825. So again, you have your one number. But if you work, have a professional lifestyle, you're going to have above that. And then, of course, the best part of it is you either get your own or half your spouse's. So depending on, if you're still married at the time, when you go into your older years, then there's a couple ways to win, if you will, and increase your benefit. That also applies if you've split. If you're married for a certain amount of time, then you also still qualify for half the benefit of your former spouse in that case. So really take a look at it again. The longer you wait from age 62 to 70, you're going to face an increase in benefits. It's really more cash flow dependent on, do you need the money at the time or do you not? Okay, next chart out there, average healthcare expenses up to $7,000 if you are talking 65 and above, and that's $7,000 a year. So, and then it breaks down there. So you can see that over time, it's pretty cheap until you really hit that 35 to 45, and then it starts increasing from there. But realize these numbers are only going to go up. All right, and then the last one, how do retirees spend their days? Watching TV 4.5 hours. That's why, if you think of all the marketing that's done out there, you watch CNBC, and then it seems like every commercial has William Shatner or Tom Selleck, or what even I would call some of the older generation stars. Well, just think of who their audience is. They're marketing to the folks that are watching. Your working professional that's in your 35 to 55 category isn't watching TV. There was a joke the other day, Lamborghini made a comment about, we don't use advertising because our folks don't watch TV, that our demographic is not sitting in front of the TV. So why would we advertise on TV? It was kind of an interesting comment, right? So when you look at all of the ads that are out there, just realize they're targeted for the older generation, because those are the ones who are consuming so much more than the rest of us. So that's it for the 6 charts, Allison. I thought they were very enlightening as to the current numbers following today's retirement.
Last, when are the tax due dates associated with 2023?
So yeah, it's tax season. So just to recap, there's lots of dates out there depending on your situation. If you're just filing personal taxes, this is from Intuit, the TurboTax website, and you have until April 18th. So I thought this was kind of interesting. So you get down here, April 18th, I'll bold it. This is when you have April 15th, the normal tax due date is on a weekend or right around the weekend. Often they give you till the following Monday or Tuesday as far as the official deadline. So you have the whole weekend to be able to catch up and do your taxes if you haven't. So that's it. Obviously, if you file an extension, let's get that back. If you file an extension, then you can be off into the October timeframe. But however, if you can see from this chart, there's like a million in between that you can be looking at as far as different dates. If you have businesses, different things you need to file. The most common one really I'm asked about is about IRAs. You have until April 18th of this year, so the tax filing date, to make your contributions for 2022. Even if you extend, then you don't get that extra extension on that amount of time. So really, there's decisions that need to be made right now in the next week or so as far as your IRAs. Otherwise, that window is going to close for 2022.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.